The CRA does audits every single year. This year is no different. Some audits are completely random. They select your name out of a hat, and unfortunately, you won the prize. Boom, you're getting audited. Or they have their own method or pattern in which it is based off of risk. Okay, so we're not going to talk about the randomness. You can't really get away from that. If you're selected for a random audit, it could be something as small as just having a T4 slip. You just have to show them that T4 slip that you received. Not unheard of. It happens before. But what we want to know is actually that risk side of things. How do they determine should they audit you? Okay, and there's 3 or 4 main things here. So we're going to talk about the very first thing that's often seen is underreporting or not reporting or incorrect reporting of income. So what does that mean? That means you haven't reported every single thing that they have in their database, in their system that they received from your employer, your bank, etc. And you haven't reported that when you did your tax return. Okay, so this is a huge one. People make mistakes all the time. Of course, it is possible you just forgot, but the thing is, that's a risk. That's a red flag in their system. So if they see that you have missed something, you don't have all your information there, they're going to notice, and they're going to either give you a notice of reassessment. So that means they change it for you on your behalf, which means your refund or what you owe them changes as well. Or they'll just do a full-on review or audit because of this mistake. It might open new things, okay? The second thing that's often seen is amendments. Okay, so an amendment is a change in the prior years of a filed tax return. So let's say you filed a tax return 2, 3, 4 years ago, and you noticed you forgot to claim union dues. If you forgot to claim union dues, these can be, if they're like $1,000, these can be this can add up. This could be $500 a year, depending on your tax rate. Of course, if you're a high bracket earner, it could be $500 a year. And you're gonna wanna go back and, claim that deduction so you can get that $500 that that you can get. That's yours in theory. So you're gonna go and you're gonna do an amendment. You're gonna open up the prior year that you filed, change something, and then refile it. That also has a huge risk of getting audited. Very common that the CRA does a review after that to make sure what you did in the past makes sense. So any changes in the prior tax years, if you do make one, just notice that there's a higher risk of being audited. So do know that. One of the things I do want to mention though, before I forget here, is the table of contents of if you do get audited, here's what you should know about audits. Bunch of information regarding, how they choose, what you should do, your rights and responsibilities. So do take a look if you do end up getting audited. You do have some resources here that can help you while you're going through that stage. You don't have to feel like you're quite alone there. Now, one of the other things to note is pretty much not having consistency year to year. One of the things that I will mention here, though, is that the CRA does audit based off of all their different departments. So, for an individual, for a trust, for businesses, all these things have their own audits, okay? And they all get audited. So they're not just auditing one service like individuals, they're auditing all 3 or all 4 or whatever. So if you're a business and you have payroll and you have GST, you might have your GST also audited, okay? Because then that's actually a very common one that people have when they own their own business. But essentially, yes, you will get audited in all these different categories. They have their own service. And what I wanted to mention though was the third thing here, which is essentially that year to year changes. So year to year, if you have any big year to year changes, that's actually a red flag to them, right? How often do people change things year over year? Not quite. Most of the things that you do one year to the next year, quite similar, not huge changes. Just like inflation, things grow 2, 3, 4, 5%, right? But if there are big changes, that's a red flag. So let's say you had huge medical expenses or you claim your disability tax credit for this year. That's actually a red flag and you might get audited, okay? So a couple things, if we're talking about sections that do get audited: medical expenses, donations, disability tax credit, just to list a few departments here. Also, if you have your own business, so you're self-employed and you have business deductions here for your self-employed income, huge section that gets audited as well. All these things, you know, let's say you have a big donation or big medical tax, a medical tax expense or expense that you have, and you claim it this year, but all the other years you haven't claimed it. Audit, you know, that's a big trigger. Could lead to an audit, could not. Most of the times I've seen quite a few donations and medical expenses that do get audited. So don't be worried if you do get audited, okay? These are very common. You know, they just want to make sure that things are correct. So those are the three main key takeaways, okay? Don't make any mistakes or, you know, incorrect reporting. If you do that, you're just asking to get audited. Think about it through their lens, right? If you made a mistake, then there probably will be more mistakes in your return, and then for them that's a trigger. Let me review your entire tax form. And why would you don't want to get audited? You don't want to deal with that headache. With that headache, nobody does. So these are some things to keep in mind, okay? If you are thinking about filing, I do suggest filing online. That way you can get your refund quicker. If you're looking for a tax service or software that works really well, that's user-friendly, I suggest using Wealthsimple Tax. That's the one that I use when I file personally. Click the link in the description. If you fund your account by $100, you get $25. Okay, so that's 25% return. And I do suggest, you know, using Wealthsimple Tax. Very user-friendly. If this video helped with any of your audit inquiries, make sure to subscribe to this channel for more practical Canadian tax guidance videos on the way. Remember, this is general information, not personalized tax advice.